morning. You're watching The Market right here on ET Now with me, Asha Faridi, Nikunj Dalmia, Avan Dabash in the studios. And first, wishing all of us happy Dhanteras.
Yes, happy Dhanteras indeed. It's got a lot of historical significance.
Yeah.
And whatever I could read in terms of the relevance of Dhanteras, it's a time when you actually go and buy metals.
But why?
It's supposed to be a safe investment. It's supposed to be a hedge against inflation. So Dhanteras is Dhan, and you essentially buy Dhan. And you secure your future. Now these traditions were set years ago, right?
Yeah.
So you would actually go and buy metal, which in a sense is considered to be auspicious. It's beginning of a new year, and then metal is of course supposed to be this classic hedge against inflation. So you would buy metal largely. It could be gold, it could be silver.
Now
really
people have got on the trend of buying gold and silver.
It's the festival, I guess, of wealth, prosperity.
Now the trend is
metal.
So if you really want to buy something which could be called as a future hedge to inflation, I would say buy a SIP. And let's look at that actually. Let's look at that. It's just a coincidence that we're talking about Dhanteras and the gold returns. What have been the returns on the gold? So follow the tradition. Buy gold, buy metals, that's the tradition. But the 5-year CAGR return, and Business Channel will always say SIP and Nifty will do well. So there you go. The 5-year CAGR return in gold, 10%, Nifty, 13%. Stretch it slightly more. Can we make it a 10-year return? 10-year return, and we are looking at CAGR return, Asha, which is what is important. Gold, 10-year CAGR return is 4%, less than 5 actually. And Nifty is given a 12.5% return. And then let's look at 15-year return. And 15-year return in gold is 6.8%, and Nifty is given a 13.5% return. So what is the point I'm trying to say here? Gold used to be a hedge against inflation. Last 15 years, it has just about managed to beat inflation. It has underperformed equities by quite a margin, and then it has even managed to give you returns which are below fixed deposits, below government
fixed
debt.
income. Yeah.
So
Okay,
I guess time to
the answer is in front of you. It's Nifty with a near 14% return as opposed to under 7% for gold. So this Dhanteras, let SIPs be your metal.
Okay, yes, indeed, it's your auspicious time then to buy into the markets via the SIP route. All right, let's also discuss then how the markets shaped up to give you a better idea. It was a pretty range-bound day of trade, to be honest, and you had the markets ending pretty flat around the 19,395 mark. So touch and go with 19,400 for the most part of the trading day. Ended a smidge below that, absolutely quiet when it came to the broader universe as well. You had the banks in comparison that did manage to eke out a minor gain. So if we're just looking at the overall setup, you did have select banks like IndusInd Bank or even financials like ICICI, Axis that did manage to end up in the green. But the broader markets, the mid-cap and small-cap index continued to advance. But Nikunj, no surprises when it comes to that picture on the liquidity front. DIIs, 18 straight sessions buying, FIIs, 12 straight sessions selling.
So, technically today is the last trading day before you go for the Diwali break. Sunday it's Murat trading. Monday, half the folks are going to be either out for the long weekend or they would be in, Diwali mood. So technically today is the last trading day, and you can already, see the festivity. In the evening when I was traveling the complex we are in, you could actually see that offices have started celebrating Diwali. You could actually
the traffic on the road told you that everyone's out and about.
Exactly. So I think you cannot judge too much into today's market action or next couple of days market action, because like we say, you're in that zone now.
Yeah.
So you're actually in that zone now. But by and large, I guess this week has been far more satisfactory for small cap index. It hit a new high. Crude prices which have plummeted, and Nifty in a sense is really following a pattern which is easy to understand, which is that 3 step forward, 1 step back. So both in terms of direction, in terms of the momentum, in terms of the global macros, whether it is yield or crude, the setting on the table I think is favoring the bulls. Also the earnings season, we've not had any major casualty. Pharma has turned around, banks are doing okay, consumer sentiment is buoyant, big companies are giving you a very positive commentary going forward. So I think it could really be a day out for the market today. Nothing significant in terms of news flow. The Nifty has done its bit already, so I think for next couple of days it may just consolidate. Sporadic news flow here or there, couple of earning reactions here or there, but I think today is just going to be just one of those days you may not get too much in terms of a direction or a momentum or in terms of a stock move.
Yeah, we haven't been getting that for the last 2 days in any case. We've just been in quiet consolidation mode. I mean, in fact, to think of it, yesterday we did even dip below that 19,400 print and close sub that mark. But, like Nikunj is saying, that for up until next week, perhaps Wednesday, we're not going to see any much momentum or participation in the market as well, at least from the DIIs, which have been holding the ship for India equity markets. But take stock of what's been transpiring on Wall Street as well. It closed actually near the session lows, which is why you're seeing that sharp downtick on the Nifty, GIFT Nifty as well this morning. It's indicating a downtick of about almost 100 points. The Nasdaq has managed to snap its 9-day winning streak. Powell saying that rates might not be high enough yet, so indicating that there could be further price hikes in the offing, and that's clearly not gone down well with the street. So weak handover this time around. Seems like today could be a red day.
Aisha, first let's look at the primary trend. The primary trend is that markets are going up, and they're going up more and they're going less. They're going down less. That's the primary trend. Within that, you may have a day off. Within that, you may have a little bit of twist and turn here or there. But this screen, I think, just captures everything. Bond yields were at 5. They've come down to 4.6. The dollar index was threatening to go above 107, 108. It is now directionally going lower, and VIX, which had almost gone to 20, seems to be coming back. Flip it around with crude, which for me I think is the most important indicator. Because right now there are three factors which are at play. First, geopolitical tensions are not over. Second, winter is approaching, which is historically the furnace oil demand, and the winter heating demand tends to move higher in winter months. And third, oil producers are cutting production to maintain the market balance. Now, despite that, that's a global market for you guys. Let's go back to crude. Despite that, if oil prices have plummeted from 96 to sub 80 and now just in and around 80, that is a clear indication of the market messaging in terms of where the demand for commodities and especially demand for energy is likely to move. So I think there is more positive than negative. The market has delighted and surprised everybody. And this week also, the small cap index not only made a new all-time high, it is up another 2%. So my limited point is, where is the correction? Or there was a correction. Typical bull market action, soft, sharp, swift. Before you realize it, it's over.
Yep, 2.6% almost for the broader markets in the week gone by. And do remember, we are also in the thick of earnings season, so digesting all of those numbers as well. But it looks like the markets are on a strong footing for now, at least. All right, let's find out what the global commentary is, reactions perhaps to Powell's actions. We've got Vinny here to sum it all up for us. Vinny?
Good morning, and actually let's start with Powell's commentary and what is, giving a lot of other comments on the back of Powell's commentary. Now, Jerome Powell actually said that the US Central Bank will continue more carefully in terms of, but won't hesitate in terms of taking a interest rate hike furthermore as well if they find it appropriate. Furthermore, he's saying that, they are going to be achieving that target at that 2% inflation target that they want to achieve. So yes, if they require an interest rate hike, that's what they'll be doing as well. That was a commentary that came in a gist from him. But now furthermore, we also had Fed's Bauman, who said that she expects further rate hikes and if they are needed, she said that she's repeating and reiterating herself that, they will be taking a rate hike as well if needed. Repeats that she's monitoring the yields and financial conditions and closely watching out for the liquidity and treasury market functioning as well. Now we have commentary that came in from Peter Schiff and he's highlighting in terms of the commentary that came in from Powell, and he said that he cannot believe that he actually chickened out from allowing him to comment more on the fiscal policy. He's like, the central bank actually has more of a benefit in terms of being an intermittent central bank, and they can actually make comments, but not making a comment is something that he was not too happy about from Powell, and that is the word coming in from him that, in terms of the bad fiscal policy, that is something that should be highlighted as well. Lastly, we have commentary that has come in from David Rosenberg, and he's highlighting that in terms of bonds should actually outperform the stocks as the Federal Reserve ends its cycle of hiking interest rates. So when they will stop hiking the interest rates, that's when they will see an increase coming in bonds. And he believes that the bonds will actually be something that will start outperforming. And in that pause period, bond stocks, all of them actually rally together. But once the rate hike cycle is stopped, he believes the bonds will do much better. So let's keep an eye out on that.
Okay, Vinny, we leave it at that. In fact, on that note, let's welcome on board our chartists as well and figure out what the trade setup for this Friday morning ahead of Diwali is looking like. Kunal, Naresh, both joining in as always. Naresh, if I could come to you first. Hi, morning firstly. Seems like it's going to be a bit of a step back after 2 days of consolidation. What supports are you looking out for on the index?
So overall, the cases, we are not seeing a major, range break. So 19,300 should now act as a support. Earlier, 19,300 was the swing support which we broke, and now again that same level becomes a support going forward as well. So closer to 19,250, 19,300. Same is the case with Bank Nifty. We are seeing a slow drift sideways. We've not made a major move on the benchmark heavyweights, but if we look at the small cap indices, a new 52-week high, a new all-time high, other indices doing well. So time to be stock specific rather than look at the index.
All right, let's find out what's on Kunal's radar then. And Kunal, we're talking about, yes, the market's being range bound, but despite everything else that is going on, it's not a bad move for the broader markets in particular. Already a 2% plus gain this week.
Absolutely, Avan. Good morning. So, there are two ends of the markets which are playing out. Indices being absolutely sideways. The heavyweight large cap names, we've been discussing this point regularly over the last many days, are not showing any major kind of a bounce or major rally or a trend shaping up for them. But on the other hand, it's not as if the markets are have paucity of stocks which are moving up high. In fact, the mid cap and the small cap stocks have done exceptionally well. What I also like about the market setup is that in the last 1 or 2 weeks when this rally has shaped up, you have seen high beta sectors like realty as well as the defensives or the low beta sectors like pharma. Both of them have done reasonably well for themselves. So it's a different textured market, more specific towards individual stocks as well as where the news flow as well as the events are positive for those spaces. I think 90,400 now remains to be an important pivot zone for the index. I believe we may probably fluctuate by 100, 150 points plus minus this range over the next couple of days.
Okay, let's find out those top recommendations then, in light of the fact that our market experts are alluding to the fact that it's going to be a range bound for next few days. So what is it that you're picking out by way of top trading calls, Naresh?
So again, looking at the same names more on the large cap side, what we've seen is very few names are making new 52-week highs compared to the index. So that is where my recommendations come from. So first is a buy on IndusInd Bank, which I continue to like. The stock has made a new 52-week high, has done well. Yesterday also saw a fall off. Stop loss at 1460, target price of 1650. Second is a buy on Power Grid, a slow and steady mover. It's a defensive stock, but it has slowly and steadily moved up. It made a new 52-week high yesterday, a fresh breakout on radar here. I would expect a follow-up move which could be faster. Looking at a target price of 230, stop loss at 204.
Okay, that's what Naresh is picking out. And what's on Kunal's radar? Let's find out, Kunal.
I'll go with a mixed setup, one buy and one sell. The first one is actually buy on Coal India. The stock yesterday gave a sign of a breakout about 320 plus mark. Very good volume as well as the price volume setup for Coal India would suggest a target or an immediate target of closer to 335, stop loss at 318. And second would be a sell on Coromandel Fertilizer. That's a stock which is actually showing signs of some overbought nature in terms of indicators. The stock is struggling to break above its 50-day moving average. Mild retracement over the last 2 days, but I believe with the indicators into an overbought territory, we may see a retracement of 2-3 percentage points for Coromandel. So that's a sell. Targets of 1075, stop loss at 1121.
Okay, let's talk stocks then. And Anisha is here in our studios as always to highlight what to expect in terms of stock-specific action. Anisha, hi. M&M clearly ahead of its numbers and the rally in the stock yesterday.
I think, yeah, autos is definitely getting back a bit of traction, and the numbers so far have been impressive. Whether it was a Hero, whether it was a Maruti, a Bajaj, the numbers have been, broadly in line or a tad bit better than expectation. And for M&M as well, we are expecting it's going to be a good set. Of course, we already have the volume data. It was strong with the auto volumes being up 18% on a year-on-year basis. Tractor segment was a bit down, so we'll watch out for that. But in terms of numbers, then revenue is expected to jump up by 20%. We are expecting that margins will hold steady around that 13% mark, and the profitability too should jump up by 24% on a year-on-year basis, and the number should come in closer to 2,900 crores. Of course, it's the unfavorable mix that is impacting the margin, so that's par for the course. But do watch out for, in terms of the commentary going forward, what are they saying, because the festive sales is something we have been tracking, and looks like it's been a good Diwali and a good festive season for the auto stocks. Not a blowout number or a very out of the park kind of performance is what we're expecting, but steady state and improvement, at least, Nikunj, as far as auto sector is concerned.
See, the stock has seen a P re-rating already, so I don't think anything in terms of an P multiple re-rating is going to be possible. FY21, 22, the stock is just hit out of the park. SUVs came back, the margin expanded, great capital allocation. So I think things have really moved in the right direction for Mahindra and Mahindra as a company. I don't think markets expecting any surprises. Markets are simply expending more of the same in terms of sticking to their guidance growth, sticking to their margin outlooks, sticking towards things on the subsidiary front are moving fine. Demand remains to be robust, and the new growth gems what they in a sense have incubated in terms of Mahindra and Mahindra, things are moving in the right direction. Remember last time they got a lot of attention largely because of their stake in RBL. So the press conference, and from a market curiosity point, last press conference and last quarterly update was of immense importance. But this time around, I think it's going to be steady. Outlook on festival demand, outlook on how much more can they really gain in terms of this entire dream run what they are having in the SUV market, because now the big launches are out. Now what we need to hear from Mahindra and Mahindra is that when and how soon the EV vehicle, the EV portfolio would be hitting the market.
Okay, that's going to be critical when it comes to M&M. But that aside, let's shift gears and move on to the pharma space and discuss earnings for an Aurobindo Pharma as well as Lupin, because they are talking about strong India business.
Oh, well, yes, strong India business plus things in US are looking better. In fact, if you look at the US sales that we got from Lupin as well as Aurobindo Pharma, much ahead of expectations. So a lot of things actually doing right as far as the sector is concerned. But specifically, let's come to Aurobindo and discuss those numbers. The revenue was up almost 26%. Net profit jumped up by as much as 83%. So a big beat versus expectation as well. Even if you look at the margin profile, that came in at 19% versus 13.8% that we had seen last year. If you look at the US revenue, that would have been aided by the supplies for the recently awarded NBO kind of business that they've got, and the higher volumes that we have seen. Even Europe and the rest of the world has managed to report a very strong growth at 19%. API too was up a solid 20%. There was one of the specific drugs that really supported the gains there. And then gross profit margins also expanded by 122 basis points. Aurobindo has already doubled this year, Nikunj, but given the kind of rally now pharma sector is seeing, it looks like there's more legs to this one as well.
See, when a cycle turns, Nisha, it's not going to be like a one quarter, wonder boy. The cycle turns, it'll turn for a couple of quarters. And I think we've just seen 2 quarters of a turnaround in the Indian pharma space, and especially the generic based space. Aurobindo Pharma, well, it's had its moment of good and bad both. So there are times Aurobindo Pharma really has been on the wrong side of the market for whatever they've done in terms of acquisition, whatever ROI, whatever capital allocation policy they've adopted. Now things are reversing. The cycle has reversed, and the injectable business, I think, in a sense, is just getting completely re-rated. So this was one of those patronized stock by some of the ultra HNI investors. They lost faith there, and then the new breed of investors have really kicked in. So from a case of depressed valuation, perhaps absolute fear, and a crunch in terms of market cap, and a disconnect in terms of the bearishness in the stock at the beginning of the year versus now, I think the stock has seen a glorified run up. If the injectable business does well, which it does, that's what understanding is, the stock is still very cheap. So I don't think the uptick in Aurobindo, given the tailwind in the cycle, the valuation, and the current leg of momentum, I think is over right now.
Okay, there you have it. Thanks very much, Anisha, for giving us that roundup of the stocks to watch in trade. And as we step into a new Samvat, ET Now brings you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, taiyar hoke aiye, and stay tuned for a very special programming. We've also got some top market experts and in fact interesting questions being volleyed around. Which company can be called the Virat Kohli of the Indian equity market? Which one has the potential to be the Maxwell from his double ton innings? Well, we've got Manish Chokhani of Inam Holdings answering these questions and more.
Virat Kohli, very easy, no? It is HDFC Bank.
Why not Reliance?
It's my pick, so
Okay.
I go
HDFC
with,
Bank
I go
would be
with
the
HDFC.
Virat Kohli stock.
It can't be a $160 billion market cap, largest bank of the country, which is going from 4 trillion to 10 trillion. It can't peak out at 150 billion. Not possible.
Okay. Maxwell. Maxwell.
Glenn Maxwell, who's going to hit pound?
Who's cramping right now, but wait till he gets up.
I hope we don't cram, but well, there are quite a few actually in that space. But there'll be someone within financials who will come out like that. It could be someone like that.
The Shuman Gill of next year.
The new sector, like I said, is things like EMS, things like chemicals, this whole consumer tech space. So I'm not recommending the stock, but the Zomatos and others are in a duopoly, and it's for them to lose this game now.
Welcome back. Still tuned into the market. Wishing all of our viewers a happy Dhanteras and very auspicious day to buy into metals such as gold. And we've got some interesting analysis and data as well. There's been a handsome 20% return in a single year, a 90% return in a 5-year period. Gold prices have almost doubled since the year 2013. So does it make sense to buy gold this Dhanteras? Before we discuss that, here's a quick look at the various instruments you can use to buy gold. Shrishti joins in with that analysis. Shrishti?
Well, yes, it's Diwali and this is the auspicious time where people look out to make the investments and purchases in gold, because earlier it was the option of go ahead and buy the physical gold. Physical gold definitely has that emotional connect, especially in India, but it also involves making charges. There are risk of theft as well as it involves a storage cost. But now you have the golden opportunity in a lot of ways where there are plethora of options where you can go ahead and make investments in gold and actually get to trade on that as well. First of all, let's talk about sovereign gold bonds. Sovereign gold bonds, like the name suggests, is a bond that is being offered by the government, and the government actually comes in various tranches where you can go ahead and make the investments directly over there. And the major positive is that you just don't get the exposure to the gold, but you also get to have the interest of 2.5% on a fixed basis per annum, and this is being paid on a 6-month basis. The minimum investment is on 1 gram and the maximum you can buy in any financial year is of 4 kgs. Other than that, if we talk about, then it has a 10-year period. This bond is actually of 8 years, but after 5 years you have the option of opting out of this particular bond. So this is the first way where you can go ahead and invest in gold. The other way is gold ETF, that is exchange traded funds. All you need is demat account where you can go ahead and not just buy the gold ETF and get to trade on that. And lastly, there are a lot of fund houses that are coming up with gold funds. This includes asset management as well as brokerage fees. So these are the options where this Diwali you can go ahead and make the investments and purchases of gold.
Okay, that's a little bit on gold, given that it's Dhanteras today. But we've been talking with big market voices this Diwali, in fact, all through the week. And among the many names, we also caught up with Helios' Samir Arora and quizzed him about Zomato as well as other food aggregators.
Samir, you have a big investment in Zomato. So I'm not getting into stock-specific conversation, but the logic here is that Indians are eating out and Zomato is in oligopoly business. So the restaurateurs have a different story to say, that Zomato is hurting our business.
I was not saying they're eating out, but पहले आप बोलो फिर मैं बताऊंगा.
नहीं देखिए ऐसा है, I personally believe that e-commerce per se is a great space to be in, because that is something that can really accelerate the growth of rate of growth. Problem is the current ecosystem that has emerged within the food service sector, aggregation, is very unhealthy. It is all driven by what I call the 3 problematic Ds. That is, discount, discovery and the delivery price. They take away virtually 40% of your revenue. With that kind of revenue going into them, another 35% in your cost of goods and packaging, you're left with nothing. So this does not impact a large format restaurant, which is more about dining in. But at the lower end of the spectrum, where you are talking about QSRs and cloud kitchens, it is actually counterproductive, the growth of Zomato and Swiggy. So I believe we need them, but we need them with fresher terms of engagement, fresher narrative. Today, if you look at, Nikush, the narrative is discount is the only way to get a customer, retain a customer and re-engage with customer. I think that narrative needs to change somewhere.
So I would have agreed with him if I saw that Zomato is making a lot of money. ये सब करने के बाद Zomato is making like 100 crore.
But Zomato stock has made a lot of money for unit
The stock has made money, but the company has
मैंने
not
अच्छे
made
टाइम पे ले लिया, but I'm saying the company is not making money. तो ये सब सर्विस अभी वो फ्री के लिए कर रहे हैं for restaurants.
But do you like this?
So my logic was different. My logic was
which is when you bought Zomato.
नहीं. I mean as a concept now. Even then maybe, but now that there were so many these QSR guys. And now Zomato has democratized that कि आपको ये 4-5 चेन में जाने की क्या जरूरत है, हमारे पास 100 variations हैं, and that same purchase has been divided into so many guys. तो इसलिए the QSR guys are growing nothing and the Zomato delivery is going whatever 20-30% per annum. Second thing is that traffic is too much. So for people to go to restaurant come back 2 घंटे आपके एक्स्ट्रा जाएंगे.
पार्किंग अलग लगती है.
उसमें आप नेटफ्लिक्स में मूवी देख सकते हो, खाना घर आ जाएगा.
पार्किंग चार्ज अलग है जी. You're forgetting the parking
मुझे
charge.
लगता है कि
And service charge is restaurant charge. You don't talk about it.
लोग कन्वीनियंस फी तो वो भी ले लेते हैं आजकल.
तो वो टाइम के बदले पैसे ले रहा है आपसे.
मैं वही बोला, उनका एक्चुअली देखोगे, जैसे मैंने 3D बोला ना, उनका एक 3C है, which is positive C's, which is convenience, choice, comfort, बहुत सारी चीजें हैं, पर वो उसकी बात नहीं करते.
तो ये क्या होगा फिर? आपने COD बता दे, A और B भी बता दो मेरे को.
A और B कुछ नहीं, हमें धंधा रहने दो, और क्या? अब बस करो.
All right, lots of interesting conversation there with Sameer Arora. But moving right on then, lots of stocks in the spotlight, so let's address them. Piramal Enterprises posted a mixed set of numbers. The losses reversed to a profit this year on a year-on-year basis, but the NII slipped close to 12%. Let's get in Vamakshi, who joins in with all the number crunching. Vamakshi?
Well, yes, a mixed set of numbers is what Piramal Enterprises has reported this time around. They've reported a robust growth in some of their key focus areas as far as the AUM is concerned. The PPOP was higher than expected, but the net profit was a miss. Now, let me quickly take you through the numbers. Total AUM saw an uptick of almost 5% on a year-on-year basis. In fact, when we talk about the retail disbursements, they've grown by almost 57%, but this was slightly lower than what the street was anticipating because the management took a conscious call to moderate the unsecured loans. Apart from that, when we talk about the wholesale 1.0 book, the management continues to accelerate it. They've seen a downtick of almost 8% on a sequential basis, but the wholesale 2.0 book, which the management expected to grow granularly, is progressing quite well. They managed to grow it at nearly 48% sequentially, so good momentum there. Now let me move on to the net interest margins then. They've improved sequentially to 4.7%. This was mainly driven by the wholesale yields, but the NII actually saw a dip of almost 12% on a year-on-year basis, and that is mainly on account of a dip in the retail yields. The calculated PPOP, however, was higher than what the street was expecting, and this was largely led by our higher other income as well as lower operating expenses. But the net profit that the company reported, 48 crores, as compared to a loss of almost 1500 crores in the same quarter last year, was an improvement definitely, but it was lower than what the street was expecting given the adjustment for one-off items like refund settlement towards the subsidiary. Lastly, the management also reiterated that they are on track to meet the stated FY28 goals of 1.2 to 1.3 lakh crores of AUM and 2.8 to 3% of return on assets. So all in all, it was a mixed set of numbers for Piramal Enterprises, and that is the reason you should keep an eye out on this counter.
Okay, Vamakshi, we'll leave it at that. Piramal Enterprises in focus. And now let's welcome on board the MD and CEO at Ashok Leyland. Shenu Agarwal joins in on the show right now. Mr. Agarwal, great to have you today on ET Now. It's been a decent quarter for the company, but highlight is that you are now the leader in the bus market share. What worked well for you this quarter, and you think it's sustainable going forward?
So see, the bus market is picking up very, very fast. That is one big factor because during the COVID time and even after that, when we were having a market down cycle, the bus was the one that suffered the most. But since the time the market started reviving, the bus market is picking up really, really well. And Ashok Leyland has always been very, very strong in the bus segment. So we are actually playing on our strength, and we have really improved our market share by roughly 9% in the first half of the year. Overall as well, we have improved our market share in MHCV. But yes, bus has been a strong point for us in this first half.
Right. We have also seen competition in the MHCV segment, and that's only been increasing with more launches and more discounts. So how are you assessing the competitive environment? And in light of that, what is going to be the company's growth strategy?
Look, we are very, very clear on our growth strategy. We are not taking any short-term measures. Even if sometimes we are compelled to, we kind of try to avoid that. We are very focused on the fundamentals of growth. On one side, we are developing better products. On the other side, we are really focused on expanding our distribution network. Right? So we want this market share growth to come from fundamental improvements that we want to make, whether it is on the product side or on the network side.
Sure. LCV, though, has been a key drag for industry players. Tell me, what's the visibility for second half, which is generally better for the CV industry? Do you expect any rebound?
Yeah, see, LCV, has not grown to the extent that we were expecting. When the year started, we had given a forecast that LCV industry, and I'm only talking about 2 to 3.5 ton where we play. So that industry we thought will grow by 4 to 6%, but the industry has grown by 3%. So it's slightly short of our estimate. But having said that, I want to also say that in H2, there are some green shoots that we are seeing. Even the e-commerce demand is building up. I think the rural demand is also building up, right? So in both the cases, I think whether it is LCV or MHCV, we think we are very positive and optimistic about the second half and even going forward.
And how is it that you're looking at growth in the second half of the year? Are margins expected to improve even further from these levels?
See, as far as the margins are concerned, like I said, we are very, very focused on profitable growth. Even in the first half, we were able to take a good price recovery or good price realization, as compared to the previous half. So I think those efforts will continue. I think what will also help us in second half is the softening commodity prices. I think we are getting a lot of indicators that the commodity prices would be softening further. So that is one. The second is our continued focus on better price realizations and better mix. That is the second one. And the third one, I say, which is probably the most important and fundamental, is that we are very, very focused on increasing our efficiency. Now, whether that is in direct material sourcing, whether that is in indirect material, or it is in our sales and production overheads, we are looking at each of the costs very, very carefully. So we are very optimistic that we will be able to increase our margins from here. Like I said, when the year started, we said that this year we want to achieve a double-digit EBITDA margin. We were very, it was very nice that we could do that in the first quarter of the year itself, because in Q1 we reported 10.0% EBITDA margin. In quarter 2, now we have reported 11.2. And I am very optimistic that quarter 3 and quarter 4, we will improve our margins from here on.
All right. Thank you for taking time out and joining in and giving us more insight as to how the overall business is shaping up and what the outlook is for M&M. For Ashok Leyland. All right, let's get a move on then and bring on board Sanjeev Bhasin as well, who joins in on the show. Hi there, Sanjeev. Good morning. Wishing you a happy Dhanteras from the ET Now family. Is it the right time to buy into gold, or shall we say SIPs, given the track record of returns?
Good morning, Awan. Wish you and the entire team and all the viewers a very happy Dhanteras. Well, a lady will always say, gold is the best asset. and rightly so. You know, it's the Lakshmi of the home which has managed to hold gold for the last 40 years. That's why gold is glittering at 62,000. So no comparison in emotions, on security. It is the only asset class which has grown over time, and it's the biggest wealth creator in Indian households. So cheers to ladies, particularly you and the others. And I think gold at any price is a very, very good hedge against the future and so on. For us, it is emotional. But I would definitely go with stocks. That's where my forte lies. And I think that earnings, macros, all are shaping very well for a very prosperous Diwali going ahead.
Avan only buys diamonds. Gold नहीं लेती है वो.
No, of course, gold, great investment. Nikunj, do you also for your wife every Dhanteras? Or SIPs?
No, see, there is something traditionally which we follow.
Yeah.
So it's always auspicious to, keep that tradition going, whether it's a coin of a silver or maybe, few grams of gold here or there. I mean, historically, that's a family tradition which, I've always followed. So yeah, I mean, personally, that tradition you want to continue, you want your family to continue. But the data on gold, and here's my limited point. I mean, gold used to be the biggest hedge on inflation. Gold used to be your out of jail card when there was problem in the financial market. Gold used to be this go-to asset when there is a problem in the world. Gold used to be this asset which always appreciated and gave you better returns. Now here's the gold, 5-year return. 5-year return, given that, we've gone through a COVID patch and lot of liquidity, on a 5-year period, Nifty versus gold, gold has underperformed. On a 10-year period, Nifty versus gold, gold has really underperformed. On a 15-year period, gold versus Nifty, well, gold has massively underperformed. Now, when you look at the number of 7% CAGR return from gold in 15 years versus a 13% CAGR return from Nifty, now bear in mind, it's not just 7%. On a compounding, when you put that magic of 7% inside and spread it on an Excel sheet, the numbers would make the difference in returns absolutely staggering. I'm not even getting into individual stocks and some out-of-box names here, but in general, this is pure Nifty. Gold versus Nifty in last 15 years, Nifty is done well. 10-year, Nifty is done well. 5-year, Nifty is done well. That's my limited point, Mr. Basim.
Correct. Nikunj, I'm not, arguing on that point. All I'm saying is that why is gold at 62,000? Because with a 20-year view, you held on to gold. And gold as an asset gives you borrowing power. It gives you the wealth effect. It gives you the runaway rise you're seeing in real estate. So there is no compromise on holding gold. It is emotional. What comes in never goes out. And you don't calculate returns in gold just because you are, always going to calculate. It is the emotional part which drives gold. And right now, like you said, when there is uncertainty, what is the world doing? The world, in fact, is flocking to the dollar. I think it's the most absurd trade that the dollar is strong at a time when the biggest debt market, the biggest borrower is the US. So I think there is a lot of change which is evident in the next few years. Gold will continue to be what it is, given that China and Russia want to de-risk their currency holding with the dollar versus that. And I'm not getting, but for us, it's that emotional bent. And as long as the Lakshmi is there, the lady in your house, she will continue to have gold as a, more secure asset than any other.
Kunal, curious because you also track the charts, and given that we are really comparing the kind of move that we've witnessed in gold, yes, prices may have doubled, but that's since 2013. I think you've been quite an advocate of buying into gold. It has seen a fairly decent run-up of late, right? Just walk us through the trajectory.
Well, yeah, I think, there are two parts to it. Of course, when you look at it from a 15-year kind of a return, it could probably have given, very average kind of returns. But again, I think in the last, 1 year or 2 years specifically, when gold in rupee terms was, I think, sub 50,000, 48, 49,000 odd. And I think in dollar terms, it was around 1780, 1750 odd mark. I think that was a point where majority of the indicators looked to be quite oversold. And that's where we went for a contra buy on gold as well as, various other asset classes in similar regards. And I think from there, it's done reasonably well. So when I look at it over the last 1.5 odd year, it's almost, like a 20% plus return for gold so far. The concern, or rather the good part about the chart so far is that on dollar terms, we are heading towards a breakout, possibly over the 1980 mark on gold prices. If that happens, we could be looking at a multi-year breakout for gold. So it's not as if that the charts have weakened significantly. Yes, gold as an asset class doesn't move like a like a typical stock where you see an upward trend being more stronger with time. It tends to get into those phases of pause in between, and sometimes the pauses could probably extend for from just few weeks to many months on a trot.
There is an interesting report, and I love these tactical idea reports. They are a pure indication that just go and buy because we know something which others don't. So Morgan Stanley has come out with a research tactical idea. So it's a research idea, but with a tactical approach. So in brokerage language, it means that in the near term, the stock is likely to do well. I'm going to read off the line from the from the Morgan Stanley report. We believe the share price of Vedant Fashions, that's Manyavar, will rise relative to the country index in the next 60 days. We expect Manyavar to deliver a strong H2 because of festival season. As per management, they have strong traction in sales, footfall and conversion during Navratri period versus last year. This year the conversions are better. Very simple, go and buy Vedant Fashion for next 60 days and they expect there is 80% probability the stock is going to do well. Sanjeev, which are the names you would say are a pure bet on Diwali sales? I mean, by Monday, Tuesday, the data as to how demand has moved will be coming out. But if you really want to invest or make money, you have to buy it, let's say, next 2 days or 3 days. Which, to your mind, could be the best ones if somebody is betting on, bumper Diwali sales?
So firstly, let me clarify what Morgan Stanley report says. He should know that the next 1-2 months is the maximum amount of wedding seasons, particularly in North India and across India. And you can't believe there is no banquet hall available. I have 4 weddings which I have to attend, part and one of some of the relatives. You can't believe what the chock-a-block is as far as hotels go, so Indian hotel would be an outstanding play. People are no longer compromising on price. They want the best of quality. They want the best of ambience. And Indian hotel is saying that they are booked. I wish they had more hotels in Delhi, Bombay, and maybe Gurgaon also. So I am very, very sure hotel industry is going through the roof. As an ancillary to that, car sales will pick up. Maruti becomes a very good play. Ashok Leyland has just told you that they are now they were the 3rd largest bus maker in the world and only gaining traction. So autos and entertainment is something which you can easily play. You can add some of the other, staple discretionary, consumer discretionaries, which will again be part and parcel of that. But Morgan Stanley is actually reading the Hindi Mahurat, which tells you that the maximum amount of bettings are there, hence the pick of Manyavar. It is nothing to do with balance sheets.
Fair enough. That's your takeaway from that report. But let's also hear it out from the top market experts that we've been interacting with on the channel. Ramdev Agarwal, the chairman and co-founder Motilal Oswal Financial Services, he spoke about his outlook for the year ahead.
It's a decadal, multi-decade kind of a trend, multi-decade trend. And yes.
But opportunities are few within the listed units?
No. That's where one has to understand. I mean, in the front you might see one Suzlon or one Inox or this, that. But I think underlying, there are a whole lot of companies which are supplying beyond them, beyond them. Because the whole architecture, transmission, it's going to be different because it's a very distributed. When you set up a, say, 5,000 or 10,000 megawatt, say, thermal plant, the whole damn thing is reduced there. Coal is reduced or uranium is reduced and power flows from there. So you need one type of architecture. Here, you have a 30 megawatt here, 100 megawatt, because the dilution of the thing is very high in the sense that PLFs are 25-30%. So what they say 1000 megawatt, actually it is 250-300 megawatt. So for 5000 megawatt, which is one side, here you need maybe a full city to be covered for, so it's very diluted kind of thing. So for that, the kind of architecture you do, the kind of cables are needed, the kind of transformer, there is a complete boom in transformer demand. Because from renewable energy, you have to step up for uploading into the thing, you have to step up, and after it is transmitted, you have to download and again step down. So I think step up transformers and all. So I'm not master of this, but there are a lot of components. It's a multi-decadal kind of a trend.
All right, Dhanteras. It's an auspicious day when, according to the Hindu calendar, you need to buy metals. You need to buy something which actually creates a lot of wealth. I mean, Diwali's got a lot of reference with wealth, knowledge. And I learned something very interesting, yesterday. And Avan Manichokani comes and says that all of us are saying that we should worship Lakshmi, we should worship Saraswati. I've started worshipping Durga. I said, why? Because Durga is the goddess of emotions, and market are fear and greed.
Yeah,
just
exactly.
Think about
how
it.
critical that is, right? And it's important as well to keep emotions in check, and also not really get married to a certain extent to your investments and not get emotionally attached. Would you say that's also critical?
That's always critical. I mean, ultimately, when you're investing for you have to understand your reason or your template for investing. Do you like the business? Is the business cheap? Will the company grow? Are the promoters great? And will there be relevance of the business? In today's disruptive world, if anything gets changed, you can't just say that, okay, I'm going to go by my gut call. No. In investing, gut call does not work. In investing, hardcore data matters, and hardcore opinions matter, and hardcore review actually matters. So that's the way it is. I mean, for me, this Diwali, in a sense, if I look back and say, okay, what a year it's been. Yeah, it's been a year because interest rates, they went up. Inflation was out of, sync. But the small cap index actually did their own salsa. They did their own tango, irrespective of what has happened in the world. The small cap index was up 30%, the mid cap index up in their late 20s. The large cap index was up by just 7%. Now, what is looking like just 7%, could it be double digit in next 1 year? What we are discussing right now, the outperformance of mid and small cap stocks, could we be discussing outperformance of large cap stocks? And here's some very, very interesting data, and I would request our viewers just to take a lot of reference with this data, which is that last 5, 10 and 15 years, if one looks at the small cap, mid cap and the large cap performance, the outperformance of 5-year, 10-year and 15-year, small versus mid and large versus small and mid versus small, just bear with me, that data will just come up on your screen. You will actually see that there are cycles which are at play. So net on a very long term period, the return between the small cap index and the large cap index is not like miles apart. It's just, just little bit here or there. But in the short term, sometimes what happens is that the gains look very, very, exaggerated, like they're looking in last 1 year. So Basin Saab, what we are today discussing is a massive outperformance in small and mid cap stocks. I mean, it's a delight when small and mid cap stocks, they go higher as a group, because that's the time individual stocks do rather well. What are the chances that we could be discussing the reverse same time next year?
Well, the whole world and the whole Indian community has been waiting that when will the large caps perform, when will the elephants dance. There is overbought readings on REC, PFC for the last 1 year. And I have also been waiting, and Suzlon has gone up 4 times. So emotions is the easy part to say. And all this on paper looks good. We should be emotional. We shouldn't be emotional. All that looks good, but you can't be left out of a big bull market. You have to be fully invested. Also, Nikunj, you have to be part and parcel of pain. Nobody can time the market, and neither can you. You have to spend time in the market. I still think there is a huge upside in the select stocks on the mid-cap side, because the participation, the mutual fund performance has been pathetic. And that's why you have to now depend on more alpha and the growing bent of the economy. 3 things are working. The dollar is fully priced, bond yields are fully priced, oil is on a weak note, and Indian economy on the demographic premium, particularly if you say the next 2 months, weddings are going to be the wholesale, then till the elections, I think there is going to be huge upside. And if not outperform, mid-caps will be part and parcel. At least the present trend tells you that if there is a 7% fall in the index, the mid-cap falls 6 but rises 16. So, you have to go with the flow. And the flow is that mid-caps are making more money for the end investor, and that will remain the pack for some time. Valuations, you are right, are very attractive on the large caps. And we also think that there should be more bent of mind of fresh money going into large caps.
Okay, fair enough. Meantime, let's also get in a sense then, okay, Sanjeev, we'll let you go on that note. Good as always to have you, and once again, wishing you a happy Dhanteras. All right, let's get in a take on the charts then. And Naresh, a quick check-in as to what exactly the charts of some of these high flyers in yesterday's trade are indicating. What's Spark looking like and Aegis Logistics with a 7.5% notch up?
So both saw price action on a one-day basis around results. But if you look at Spark, now the stock looks interesting for the fact that what has happened with Sun Pharma, generally they've been correlated. The stock has not bounced back as sharply compared to Sun Pharma. Technically, if you look at Spark, the last high back in November, December of last year was around 260.65. Then in August, September was 260.65. Yesterday, we've come closer to 255, 258. If it breaks out about 260.65, that would be a cup and handle breakout in the short term. So looks promising, waiting for a follow-up action above the 260.65 mark. So Sun Pharma, Advanced Research Company, Spark would be interesting at current levels. Aegis Logistics, on the other hand, has been a stock which has drifted lower from that 400 mark slowly and steadily towards 290. Yesterday, there was a block deal on the stock. Post that, it saw a decent recovery. But overall, looks like a sideways drift closer to 340 would be a tough resistance for the stock.
Okay, fair enough. That's a view coming in on some of the mid-cap movers. But what's Diwali without some lip-smacking treats? Well, we at ET Now have brought you one with a twist. Startup icons Vinita Singh of Sugar Cosmetics and Nitish Mittal Sen of Nazara Technologies battled it out in this special cookout edition. Let's find out whether the duo can actually pack in a punch as they don the chef's hat and talk about their favorite food and the recipe for success. Take a look. Guys, are you ready to battle it out for a cookout? You're making some yummy pasta. Let's start off by you guys telling me about what's your favorite Diwali food.
For me, favorite Diwali food is usually all the Indian food that you make, right? All the heavy. So you fast for 1 week before. You fast for 1 week before Diwali, and then you have whatever
that
you
can
have
hog at Diwali, yeah.
What about you, Vinita?
I love all Delhi food. I grew up in Delhi and Diwali is huge there. So like chole bhature and rajma chawal, and then of course lots and lots of mithai.
So what would you say, guys, is like the recipe to success? Because I know that I want to talk a little bit more about how you guys started out, which I will do. But what according to you is like the recipe for success?
So for me, I think I call something called 3 Ps. Okay. I think for anything, the starting point really is passion, right?
Yes.
But if you have passion, you need to persevere. So perseverance is
key. So for me, it's been just persistence.
How do I just take it like this?
For like 15 years, I've been a founder and had a lot of failures. But I think the only thing that failures are not fatal. So if you just hang in there,
that's
keep showing up.
Failures are not fatal.
Yes, keep showing up.
Yeah.
And I think if you have to build something for decades, you have to enjoy what you're doing.
Okay.
So it also comes back to being
passionate about
what you do. So I think as long as you have a lot of love for your consumers and patience, in India the opportunity and the market is so big and so fast growing and so versatile that I think anyone can really build something great.
This is what Nitish has presented, his Alfredo fusilli pasta with green vegetables and parmesan on top. Capsicum as well.
I added parmesan already.
It's all my gaming practice.
All your gaming practice. Maybe we'll give that to you. And Vinita, oh, look at this, garnishes and all. Maybe she's really gunning for
I'm gunning for the first place.
Putting this on top, making it look super fancy. Maybe we'll add like some basil leaves. Is that a good idea, Chef? Okay. This is me helping you.
Thank you.
You didn't make a Diwali mithai?
No Diwali mithai, but the question is, who do you think won that challenge, the cookout?
You tasted, you tell me.
I will tell you that Nitish his pasta looked amazing. He forgot to put salt, Nikunj.
Oh dear.
So then he completely lost.
He's on salt-free diet, more like a diet.
Yeah, that's how he backed it up. He said, I'm a salt-free diet.
Yeah, healthy.
Yeah,
Markets will like such promoters who are taking care of health so young.
Yeah, but it was a great fun shoot and we got lots of recipes of success as well, and we'll be airing that entire interview later today.
Okay, Sandeep Sabharwal, good morning. disconnected. I thought he was ready. He's supposed to come to studio, I think, maybe. Okay, let's hear out an excerpt of some stocks, and this has got to do with the other Diwali part. One is, Diwali are two things. Lakshmi Puja, it's about firecrackers and good food. Good food we've done. Diwali Puja, well, we'll be it's Diwali on Sunday. But what about Diwali Dhamaka? Diwali Dhamaka stocks, and here are some stock ideas for next Samvat from Pankaj Murarka on what he's betting on.
Positive on Paytm as a company because I think fintech is at the intersection of finance and technology. And my view, probably some of these fintech companies will emerge as the fastest growing companies within the financial sector for this decade. So clearly, I like that. And now the company is turned profitable, and probably they're going to have very strong growth over the next, let's say, 2 to 3 years. And I think valuations still are very reasonable. So in the context of the near-term growth over the next couple of years, and more importantly, the opportunities that lie for the company from a medium-term perspective, I think it becomes a very compelling bet for me.
Every time whenever the interest rates come off, okay, when the yields come off, the new age stocks fly out. And Zomato has a well-established business model. Any existing competition that was coming through is not there. Dunzo has fallen off, so the Reliance weight, what if they enter the segment, how it would do, is no more a challenge to Blinkit. Blinkit has broken even, and Zomato and Swiggy are in a veritable duopoly business, growing very well. Profitability is established, and there's a long runway ahead of compounding growth. So I believe the stock should do well in the next 3 to 5 years.
That's Chris Wood, ET Now exclusive, wishing Happy Diwali once again.
Join me, Chris Wood, Ye Diwali, Muskan Wali. Happy Diwali.
As you walk into trade this morning, it is going to be a weak start for the Nifty. But that really does not matter because, we've had a good comeback week. The small cap index, all-time high. Mid cap index, great comeback. And Nifty, frankly, has now gone below that scare zone. The scare zone, Kunal, was sub 19,000, 18,500, 18,600. We were in that scare zone. From that scare zone, we've come out at the higher end of the range now. So what are we looking at? Are we looking at a new high, if not today, if not tomorrow, maybe this month?
Yeah, I think post Diwali, I would probably expect. So, what has actually happened, Nikunj, is that the markets have gone through a lot of jitter in terms of news flow across the globe to now stability. And, when the markets get into a fear kind of a zone, like what we were, I think a week out back at the sub 19,000 mark, to a point where the markets have now gone to a stable territory, devoid the large cap names actually participating. I think that could probably be taken as a sign that maybe the market breadth of the entire market is quite positive. Now, if the large cap stocks did start to participate, we could be looking at a more formidable upside for the index. So, as of now, it's more of short-term trading which has managed to yield good returns. Portfolios would start to yield great returns once the large cap stocks they start to fire up. Now, which trigger and what could be the catalyst for that is something to watch out for. But I believe that we are getting to that second zone where sooner or later the large cap stocks would start to fire up, and we could probably expect a much more stable uptrend. And post that is where I believe that the markets may break past about those previous highs.
Naresh, it may not happen on Diwali, but could it happen before Christmas? A new high?
So that's been a confusion purely because of the heavyweights. The day I see at least one of the heavyweights doing that, it should not take much time, set 19,500. If you have 40-50% of the index going nowhere, it's tough to cross a new high or even make a new swing low. So if we see one stock taking leadership, whether it is Reliance, HDFC, ICICI, It should not be a difficult task, but as of now, none of them are showing any signs. We've gone through the result season as well. We've gone through global correction as well, but most of the stocks on the heavyweights are sideways. But if you look at the broader, say a Nifty 50 equal weight chart is different. Nifty 500, the chart is better. Small cap, a new all-time high. So overall, watching out should not be difficult if one of the heavyweights takes a trend.
Let's switch focus from heavyweights. Let's talk about what's happening at the mid-cap end of the market. They've been the heroes all through this week gone by, or rather the year gone by, last somewhat that is. Are they going to continue their uptick going forward as well? For today though, let's get in some mid-cap trading ideas. Kunal, what's on your list?
So an interesting stock which has given a breakout yesterday was Vatek Wabag. The stock has broken past about the 530 plus barrier, which was a resistance of sorts over the last couple of months for the stock, and I think now it looks very attractive for a setup in terms of a breakout. It's confirmed a weekly breakout as well as a monthly breakout after yesterday's strong price up move. So would suggest a buy with 575 to 580 as an immediate target, stop us at 535.
Right, Naresh, what's on your mid-cap list?
So that's a buy on City Union Bank. The stock has been a major underperformer. Now started in the last couple of days, making a few months high. 140.45 was a resistance. Yesterday tried to cross it with good volumes. Looks like a short-term breakout done here on a day when the Bank Nifty was not doing well. So expecting a follow-up move towards 160 plus in the short term, stop loss at 138.
Okay, let's shift focus from the markets and let's tell you what else is happening across the world. And over a month after the Hamas attack, the Israeli army has continued to pound the Gaza Strip today with airstrikes and ground offensive. Meanwhile, the US has said that Israel will begin 4-hour pauses in northern Gaza to allow people to flee hostilities. Delhi's overall air quality has now slipped into the severe category today despite receiving light rainfall. This comes amid the Delhi government's ongoing efforts to implement the idea of artificial rain through cloud seeding, which will be attempted around November 20th to curtail the pollution situation in the city. And in sports action, New Zealand has registered a thumping 5-wicket victory against the Lankan Lions in Bangalore. The Kiwis boost their chances of advancing into the World Cup semis. Meanwhile, New Zealand has pushed Pakistan to the brink of a World Cup exit. However, Pakistan are not officially out of the World Cup just yet. And electric air taxis likely are going to hit India by 2026. Interglobe Enterprises, which backs India's top airline, that's Interglobe Aviation or Indigo, and US-based Archer Aviation are on a track to launch an all-electric air taxi service in India that will be cost competitive with on-road services as well. The services are set to start with 200 aircraft in Delhi, in Mumbai, as well as Bangalore.
All right, here's Manish Chokhani. What does Reliance Industries profit this quarter signal to investors, and specifically on where India's biggest private sector conglomerate is headed?
Reliance had a net profit of 150 crores. 150 crores. They will be north of 80,000 crores. If you did nothing and just sat down and you know this company is going to be there for 10 years, their capital allocation is generally okay, they make a return which is north of 15% on equity. You will have your ups and downs, but when you look back 5 years later, and I'm assuming your starting point of valuation is not crazy, it's inevitable you'll make money here. You're not going to make it in fixed income. You're not going to now make it in buying real estate, and you're not going to speculate on real estate. Where will you have to create wealth with businesses. And there are plethora of businesses coming. I go around to see the States now because of so many companies.
That's India for you, isn't it? I mean, that's the point I think, Manish Bhai was trying to, indicate that Reliance had a quarterly profit of 150 crores. And that was not once upon a time, that was like 3 decades ago. Today, they are on course to make a profit of 80,000 crore. So just the sheer power of compounding, sheer power of the growth engine which has been unleashed in this country is what you must recognize. Now, markets, we can endlessly argue about Mehanga, Sasta, stretched valuation, contracting valuations. The bottom line here is that markets have really rewarded companies which have really compounded a great degree of wealth. The problem is that a stock like Reliance, when it just gets into this hibernation, that's 10% of the index doing nothing. HDFC Bank now, or HDFC Twins, they are no longer twins now, it's one entity. That's 14% of the index. So that's 10 plus 14, 24. That's 24% of the index. It's just doing precious little. State Bank of India, well, 3-4% weightage, that's not going anywhere. ICICI Bank just, moving in the tight band of 5-8%. So almost 30-35% of the index now is jammed. And when 35% of the index is jammed, and on that you've got a drag like IT, that's about 50%. 50% of the index is just not going anywhere. Out of this 50%, what could make a comeback? I don't think IT will make a comeback. I don't think you will see a big recovery in Reliance per se, looking at right now where the valuations and the entire capex cycle is. Then the large part of the heavy lifting will have to be done by banks. So banks really hold the key as to what will happen to the index next year, or what will happen to index, let's say, next couple of months. This year it's been a flat year for Nifty, Kunal. Same time next year, could Bank Nifty be the best outperformer?
Yeah, I think, Nikhil, as you rightly alluded to the data, Reliance Industries, HDFC Bank, etc. have been drag for the indices. And, when you look at the last 6-8 months of chart patterns, there were 2 points when, for example, when HDFC Bank and HDFC, they started to move up higher. That was on the preemption or some sort of rumors on the stock price on the merger, and the stock, I think, rose up by a margin of, I think, 10-15%. Reliance had a very similar kind of a price effect. The stock moved from 2200 to 2600, which means that these stocks require some sort of catalyst or news flow or some sort of event surrounding themselves to try and get into that breakout zone. As of now, at least in the very near term, we don't see any kind of a catalyst in terms of event news flow for these stocks. And that's why the expectation is that when would these stocks get into a turnaround or a breakout mode? I think whenever that happens, has to be on the back of some sort of a catalyst in terms of news flow. But I believe that, these stocks, they have a tendency of going into sideways for a prolonged period of time and all of a sudden getting into a breakout. And whenever that happens, those trends last for months as well as years for these names. Just to give a classical example, Reliance Industries remained sideways for almost 10 years. I think 2007 to 2017, the stock remained, I think, at 550, 400 kind of levels. And when the stock managed to give a breakout, we saw the stock giving returns of 3x, 4x in a very short span of time. So I'm not saying that it's going to be a similar kind of a time-wise consolidation, but I think these stocks have a tendency of doing that.
Right. Okay, that's the take coming in on what the markets could do a year from now. But M&M, that's going to be the stock which is going to be in focus today. We are expecting a good performance from M&M, but the stock, remember, already climbed up ahead of its numbers yesterday when it was the largest mover on the index, managed to hold out almost 4%. So let's hear out what Nikunj's take is on the same.
See, the stock has seen a P re-rating already, so I don't think anything in terms of an P multiple re-rating is going to be possible. FY21-22, the stock is just hit out of the park. SUVs came back, the margin expanded, great capital allocation. So I think things have really moved in the right direction for Mahindra and Mahindra as a company. I don't think markets expecting any surprises. Markets are simply expending more of the same in terms of sticking to their guidance growth, sticking to their margin outlooks, sticking towards things on the subsidiary front are moving fine, demand remains to be robust, and the new growth gems what they in a sense have incubated in terms of Mahindra and Mahindra, things are moving in the right direction. Remember last time they got a lot of attention largely because of their stake in RBL. So the press conference and from a market curiosity point, last press conference and last quarterly update was of immense importance. But this time around, I think it's going to be study, outlook on festival demand, outlook on how much more can they really gain in terms of this entire dream run what they are having in the SUV market, because now the big launches are out. Now what we need to hear from Mahindra and Mahindra is that when and how soon the EV vehicle, the EV portfolio would be hitting the market.
That's the take coming in on M&M, but let's get a move on and also tell you a little bit about what our chartists are betting on by way of their index recommendations and index calls today. Right now for the pre-open trade, holding out by about 19,350 levels, and unanimous hold recommendation there from our chartists, all advocating that that's the position that one should be taking, and that's exactly what the market moodometer and the Nifty consensus indicates. Let's find out the views on the Nifty Bank, and there you have it, a hold call from 3 of our technical guests. All right, lots that we'll be closely watching out for, a lot of individual movers as well that we'll be tracking. But Kunal, just come in yet again on the Nifty Bank Index. What is the rationale for that hold recommendation, and are you seeing a divergence in move when it comes to the large versus mid caps?
Well, yeah, I think there is a lot of divergence within the large and the mid caps, of course, but within the banking space and the Bank Nifty specifically, my sense is that we are trading into a narrow kind of a band, a low activity zone for the indices. Even yesterday, for example, the Bank Nifty I think remained more or less in a 70, 80 point or 100 point band for itself at 43,600 odd mark, plus minus 50 odd points. And I think that's one of the major concerns for the index. Now that the fact that we don't have any major trigger across large cap stocks and even the PSU banking names, I think most of the PSU banking stocks, the likes of SBI, Bank of Baroda, etc., are also going through their individual ranges. We expect that the Bank Nifty would also remain more sideways.
Okay, getting set then for the market open then this morning. While much unlike what the GIFT Nifty was indicating, seems like it's going to be a quiet sort of start. So some more consolidation seems to be in store for us as opposed to what the GIFT Nifty was indicating. The bias could be a little bit lower, and suffice to say it's, sub 19,400. That's where we're going to be. A lot of stocks and sectors which are going to be in focus. You'll of course want to look out for whether or not that momentum within the auto pack continues. Remember, yesterday was a great session for M&M ahead of its numbers. It shot up about 4%. Today as well, it's seeing, some amount of follow through. At least the positive bias is continuing for sure. There's also Hero MotoCorp with that 1.25% dash yesterday. Tata Motors, Maruti, all these stocks within the auto pack were fairly buoyant. So you may want to look out for whether or not that trend holds. Having said that, technology continues to be the beaten down one, as is the case with Reliance as well. So even yesterday, Reliance, for instance, was down about 1% or so, and it continues to struggle around the 2,300 print for Reliance Industries. So a bunch of stocks that we are looking out for. Also, Aurobindo Pharma, we've been talking about as to how pharma is making a comeback, but very select cases are the ones which are holding out well. So Auro Pharma, wherein you've seen some strong growth in their quarterly performance, their EBITDA has managed to beat the estimates by 20%. Look out for what this stock does in trade. If we can just bring up the Auro Pharma intraday graph from the pre-open rates, that will be perhaps more pertinent than the F&O trend on Nifty Bank. There's also Vedant Fashion. That's going to be the other stock which is going to be in focus. So these are a bunch of names, but first, the first sticks right now, marginally in the red, skirting around that 19,355 odd print. Let's see what Auro Pharma is up to. Strong numbers coming in there. That stock will just come up for you on your screens. And then, of course, a 0.7% move. Vedant Fashions, wherein Morgan Stanley maintains their overweight with a target price of 14.18. That stock, though, starts off absolutely flat. Strong numbers among small caps as well. So, growth is also the one which is backing the momentum within small caps. Subros, e-clerks, strong numbers from both these companies. Look out for what these stocks do. 5.5% higher for Subros and e-clerks as well. A big jump up of 5%. Nazara, Concord, both have seen a downgrade coming in this morning from Jefferies. Downgraded the rating now to a hold from the earlier buy. Piramal Enterprises, muted set of numbers in the second quarter, so that's another stock which is going to be sensitive to its earnings. 1.25% lower for Piramal Enterprises as we speak. Hero Murkov, wherein the High Court has now stayed the DRI proceedings against Pavan Munjal. That's the other stock which is in focus. Let's see what M&M is up to ahead of its numbers. And that big rally in the stock yesterday starts off with a downtick of 0.7%. There's also Power Grid, which came out with its numbers. Also the fact that they've raised the FY24 capex target now to over 10,000 crore rupees from the earlier 8,800 crore rupees, marginally higher for that one. Z Enterprises, the Q2 numbers are above estimates. Sony's push for top post calls has been stalling the merger talks. Z downtick of 0.7%. Good numbers from Torrent Power, good numbers from NBCC, GSK Pharma, GR Infra, AstraZeneca, whole host of earnings reactions coming in there. Also, some weak numbers coming in from Muthoot Finance. The Q2 numbers were below estimates. The NIMs came in at a 5-quarter low, that of roughly around 11%. It's a 6.5% crack that you're seeing for Muthoot Finance this morning. Piramal Enterprises, let's revisit that stock as well. Weak numbers there too. The profits have slipped 45% year on year. 5% sequentially. AB Fashion, RVNL, Campus Active, NCC, all a weak set of numbers. Kunal, what's looking good to trade?
Yeah, so I think again very similar kind of expectations for the indices, but in terms of individual stocks, Coal India is something which looks attractive. Yesterday the stock gave a breakout above the 320 mark, so we'll be looking to trade on the positive side for the stock.
All right, let's find out what Naresh's take is as well on the market open. And Naresh, what's the first trade you're punching in?
So buy on City Union Bank, which showed a lot of movement yesterday, relative strength as well. Expecting it to see some follow-up.